I'm joined by Tom Hayes, Chairman and Managing Member, Great Hill Capital. Tom, thank you so much for joining us today. Let's start out with this 90-day pause that we're getting between the U.S. and China. I think this caught a lot of people by surprise because many I talked to weren't expecting to see this fast. What's your reaction?
Yeah, we expected resolution. We didn't expect it this quickly. It's unreal. And right now, it's exacerbated by the fact that the phrase of the day is called trapped bears, okay? We had record selling by hedge funds and CTAs at the absolute low in early April. So now the market's come so far so fast, even before today, and they were praying for a retest of the lows that never came. So now they've got to buy up. They're forced buyers. They're forced covering. So this could probably get some continuation, some follow through for the next few days because so many people are structurally off sides.
So what are you expecting now? Because yes, you made the point about trapped bears before we had any deal on the table between the U.S. and China, and all we had on the table was the framework of a deal between the U.S. and UK. So you call them the trapped bears. How do you see this forced buyer dynamic playing out?
Well, they got to catch up. And what's interesting is who's been buying from these trap bears. We have a record amount of announced buybacks from companies, $665 billion. So they're buying. These poor guys are trying to cover their shorts, trying to catch up, trying to chase up the rally. So my guess is this is going to continue for a few days. They're going to force them in after a huge move off the bottom, even before today. And then we'll probably get a little bit of volatility as people digest, like, oh, we've got 90 days, et cetera, et cetera. So expect a little short-term material follow-through, but it's very interesting. On April 7th or April 8th, Trump went out on Truth or Twitter or whatever,
social media platforms,
and he said, now's the time to buy stocks. And no one believed him. And the next day, the market went up. Last week, he did the exact same thing when people were getting pessimistic before the UK deal. And he said, America is going to boom. And he also referenced stocks. So if they say, you know, everyone's looking for the Fed put and the Treasury put, the Trump put is real. He's paying attention. He listens to people. And why we were optimistic and why we were positioned for this, not to happen so soon, but positioned for this to happen eventually, is because he's shown, and the administration has shown, flexibility and rationality throughout this process. He genuinely does want to negotiate better deals. And if you remember the first term, the people with assets like me that manage money, we did okay. It was a good 4 years. The everyday people that work every day, the middle class, the lower middle class, they did better than ever during those 4 years. And that's what President Trump wants to see. And it's deals like this and initiatives like this that is going to create that. You won't see it in a week, but over the next few months and couple years, you're going to start to see that middle class boom.
We have seen more flexibility come to pass than we initially saw at the beginning of April. But I do wonder if some of that is because of the leadership shift that we saw with essentially the Treasury Secretary with Bessent leading versus Navarro.
They did put Navarro in the closet for a few weeks, which was, you know, a welcome reprieve by yours included. However, I will say, Lutnick did get the job done with the UK, and that kind of paved the way for positive talks with Bessent over the weekend. So I got to give credit where credit's due, and President Trump has made no bones about it. He wants to be recognized as one of the greatest presidents in history. If stuff like this continues to happen, and him cleaning up messes that have been going on for decades, I'm not blaming any one administration, Republican administrations, Democratic administrations, neglected to do this. If he cleans this up, he's got a shot at his goal for sure.
Okay, and let's talk about, you mentioned the buybacks at record levels. So how important is that in terms of driving momentum?
Well, there's no question. You've got CTAs and hedge funds covering, now chasing up, now $665 billion of buyback announcements. Oh, and by the way, earnings, in the face of all of this uncertainty and craziness, earnings came in much better than expected. 13.4% earnings growth versus 6% estimates. And the forward guidance hasn't come down that much for 2020.
Some of them have, and then some haven't even given guidance.
Yeah, fair. But listen, let's look at S&P earnings for 2025. came down to, basically from 270 to 265, about 3.5% since the beginning of the year. That's pretty material. However, 2026, back-end loaded, still $300 a share of earnings, which implies we're trading at about 18.5 times compared to the 10-year average of 18.3.
Okay.
There's still things to do.
And then, so speaking of things to do, I know you have some picks. You like Disney. Tell us about your thesis there, and if you still like it.
Yeah, it's interesting. We were pounding the table publicly for Disney. It got down to like 85, and then after we went out, buy it at 85, I think it went to like 83 or 81, of course. Yeah. And now it's at 108. We think over the next 2 years, this is a $200 stock. They're hitting on all cylinders, whether it's the parks, whether it's the cruise experience, whether it's the consumer products. And they just guided, they said, we're going to do $17 billion of cash from operations this year. And by the way, 180 million subscribers. They're second to Netflix. They added 2.5 million. They're going to do this ESPN. Their sports business is through the roof. So we continue to like it, despite the fact it's moved up so much in the last few weeks.
And the Abu Dhabi.
Yeah, that doesn't hurt
coming.
either. Yeah.
And what else is on your list?
Here's one that no one's going to want to buy. Albemarle. Okay, this is okay.
Tell me about this one.
Yeah, you know me. I'm early, and people are like,
do
no.
like. There are sometimes some picks on your list. I'm like, huh?
And then a year later, we sit down, and you're like, oh, that was pretty good.
Yes.
All right. So Albemarle, #1 lithium producer, also lowest cost lithium producer. Lithium prices are in the garbage. Why? Because everyone says EVs are out of favor. Blah blah blah. China is 60% of the EV business. It's not a natural market. It's a government subsidized market. They have an initiative. They're going to continue to grow. They grew EV sales 38% last month in China. So what's going to happen? As one of the biggest producers, you just wait it out. Lithium prices are very cyclical. Every few years they go up and down. We're at the trough right now. They've got $3.1 billion of liquidity to sit it out. All the small players will go out of business. That shrinks supply. Demand continues to go up. And energy storage is a big thing. Overall demand from 1.2 million metric tons right now to 3.2 in the next 5 years. Albemarle, we talk about Disney going up to 200. Albemarle could be a triple over the next 3 to 5 years.
Really? Okay. Yes. Because we just threw up a chart, and you mentioned the trough of, I don't know if they're going to pull it back up again, but we just threw up a chart, and you mentioned the trough of lithium. The chart looks like that for Albemarle.
I'm going to tell you something right now. It's at $61.
We'll look at it. Yes.
It's going to go, let's say, it's going to go, right after I get off the air, it'll probably go to $55. Everyone will say, that guy's an idiot. A year and a half from now, you're going to have me on, Diane, and the thing's going to be over 100, probably closer to 150.
Okay, all right, you heard it here first. That's Tom Hayes, Chairman and Managing Member of Great Hill Capital. Our thanks to Tom.